Hi everyone, I am Shruti and welcome to another edition of G2 Financetech's weekly market update covering the leading world markets. This week we are calling it the Tariff Tempest. It's been a whirlwind. Tariffs flying, stocks swinging, central banks pausing, and gold glistening. Let's unpack what happened across the US, the UK, Japan, and China and what it means for investors. United States, tariff tantrums and market whiplash. Let's begin where the storm started, Washington. President Trump hiked total tariffs on Chinese imports to a staggering 145%. That triggered a dramatic market reaction. A brief bounce after a 90-day tariff pause for allies, followed by a brutal sell-off when the US-China rhetoric escalated again. The Nasdaq dropped over 4% in a single day, officially entering bear market territory. Meanwhile, gold hit an all-time high of $3,220 an ounce, and even the US dollar weakened as traders sought safety elsewhere. Ironically, inflation data came in cooler than expected, but that was quickly overshadowed by trade policy fears. Fed officials stayed cautious, with John Williams warning that the tariff storm could push inflation to 4% and growth below 1%. United Kingdom, bracing for crosswinds, finding silver linings. Now, let us shift our focus across the Atlantic. In the UK, it was a mixed week. The FTSE 100 briefly surged 3.2% on hopes of avoiding tariff fallout. Barclays and Anglo American led the charge. But the celebration didn't last. Tesco issued a gloomy outlook and renewed US tariffs darkened the mood again. The Bank of England is caught between hot inflation and trade uncertainty. Megan Green of the Bank of England even called it an inflation puzzle, as the weak dollar unexpectedly strengthened the pound, easing import costs. For now, the Bank of England remained cautious, with some chatter of early rate cuts if trade disruptions escalate. Japan, caught in the crossfire, striving for stability. Heading to Japan, the week brought its own set of challenges. The Nikkei plunged 5% early in the week as exporters took a hit. The yen surged as a safe haven, further squeezing profit margins. The Bank of Japan convened emergency talks, calling this a unique policy shock. Governor Ueda put hikes on hold, and the government is reportedly preparing a stimulus budget to cushion the blow. Adding to the response, Japan joined China and South Korea in a rare trilateral coordination meeting. The message? They are united in managing the trade fallout and standing by the economies. China, fighting fire with stimulus and steely resolve. And finally, let us talk about China, the other key player in this escalating trade narrative. Tariffs on US goods were raised to 125%, but instead of panic, Chinese markets held up, thanks to suspected state-backed buying and stimulus hopes. The PBOC intervened to stabilize the yuan, and officials ruled out further devaluation. Fresh data showed deflation setting in, with prices falling both for consumers and producers. That's prompting expectations of more fiscal stimulus. Think infrastructure spending, tax breaks, and consumption subsidies. The broader message? China is holding firm, focused on domestic resilience while signaling it has tools to weather the storm. Our take: global storm, local shields. So, what are we seeing in all this? The tariff tempest is real, and each country is responding in its own way. In the US, policy shocks are steering markets. The UK saw a flicker of optimism but remains cautious. Japan is leaning on its fiscal and monetary toolkit, and China is deploying the full force of its economic playbook to stay steady. For investors, this is a time for quality, flexibility, and focus. At G2 Financetech, we believe in staying nimble, using structured products, risk-managed strategies, and a sharp eye on fundamentals. That is it from us this week, and we'll be back next Sunday with more insights to help you stay informed, stay protected, and stay ahead. Until then, thanks for watching and see you soon.